Good afternoon, this is Barbara Campbell. I'm here today to discuss the Acme financial proposal. So I wanted to give you a little bit of a background regarding Acme Medical Center. Performance improvement was conducted on Acme. Assessments in multiple areas of the organization resulted in a $70 million loss being turned into a $39 million profit within a year. So Acme Medical Center, it faced three major financial issues that contributed to this $70 million loss, and that includes the Epic patient accounting system. It was not implemented correctly 2 years ago, and it did not recognize net revenue accurately. So in this time frame, AMC wrote off $110 million in net accounts receivable. Reimbursement rates, they were not being compared based on the complexity of services offered by this facility, and a lack of expense control in which personnel necessity was compared to operating and financial performances. So this proposal will provide financial documentation regarding the implementation of EMBLA, the EHR system. So AMC, our current ratio, what this means is the current ratio was determined by dividing its total current assets by its total current liabilities. So national current ratio average is 1.44. A good rating is 1.2 to 1.7. So as you can see, in 2018, we were at 1.47. And as of 2019, it was 1.26. So as of December, current ratios over 1 do show that a company has ability to cover its short-term debt. So based solely on Acme Medical Center, the decrease in the current ratio from 1.47 to 1.26, it does show operational risk, but this is usually caused by expansion. If it continues to drop year to year, this could lead to a company failing, not being able to cover its debt. So cash flow and balance sheets, I have these here. The cash flow statements, it summarizes the amount of cash and cash equivalents entering and leaving a company. It's a valuable tool it's a valuable tool that measures the profitability and the future of the company. And so it's helpful when budgeting. A cash flow statement is mandatory and it complements the balance sheet, but it also differs since it doesn't include the net income of the company. So I have some graphs there that you can see the differences between 2018, 2019, and what was going on there with assets, liabilities, and the cash and cash equivalents. So the balance sheet itself, of course, it lists the assets, the liabilities, the shareholders' equity at a particular point in time, and it is usually done at the fiscal year. The balance sheet is the most important statement because it shows the financial health, the overall health of the company. It must be up to date if a company wants to attempt to get additional debt or equity financing, selling, or determine its net worth. And I have the balance sheet there for you for AMC. So AMC, we're going to go over some trends, what that means exactly. So the company trends are best determined when using a statement of change in net assets. Details changes between current and prior period balances. To reduce seasonality, AMC should conduct trend analysis yearly versus monthly. So the yearly reporting, it helps predict the future of the company and it removes those variables. It shows here there was a 0.1 increase from 2018 to 19 in sales, 3.3% increase from 2019 to 2020. And that's just comparing first quarters. There was a 14.2% decrease in net earnings from 2018 to 2019, but then right now we're on an upward gain. We have a 42% increase from 2019 to current. So that first quarter reporting shows that 2020 has started out the best year for the past 2 years, which indicates a positive financial health for Acme Medical Center. So some different financial analysis methods. I'm going to talk about the two here, horizontal analysis and vertical analysis. So the horizontal analysis, it's a financial measurement. It's used for reviewing and comparing the company's financial records over multiple years. It can determine if there are spot trends or growth patterns for specific line items over a number of years. It measures the performance of a company, which can help determine if it's operating efficiently and profitability, or if it's having any problems. So the following equation is used for horizontal analysis calculations. So you can take whatever year you'd like. It could be 10 years ago if you have those numbers. So the comparison year line item, whether it's assets, the liabilities, whatever you want to compare, minus that base year line item, and then divide it again by that base year line item, times it by 100, and then you'll get your percentage. So in the vertical analysis, it's a financial measurement used to determine if a performance metrics has improved or declined. It's the easiest and most effective measurement when comparing financial records to another company or across the industries. And then I have the equations here. So on an income sheet, it's sales is always 100%. So the line item, the amount, divided by that total sales times 100 gives you that percent. On the balance sheet, it's usually the total assets. It's always 100. You get that line item divided by the total assets times 100. So comparing financial analysis methods. So I'm going to compare those, that vertical and horizontal analysis method I just went over with you. So the vertical analysis and horizontal analysis, they're both similar because they measure the measurements to compare financial statements of a company from year to year, or that compare a company to another company during a specific time frame. The vertical analysis and the horizontal analysis are both used to compare companies of different sizes. So some differences, the vertical analysis, it compares multiple factors such as profit, the costs of goods sold, overhead, sales, salaries, or marketing, determine which factor is impacting profit margins and if performance metrics are improving or declining. The horizontal analysis always compares a single line item to the baseline year, and it's usually stated as the percentage of growth. Vertical analysis, it's primarily used for analyzing sales figures, operating costs, and income tax, where the horizontal analysis, it's primarily used for analyzing balance sheets, income statements, and retained earnings. So some case analysis, financial analysis was conducted, of course, on Acme Medical Center, and using that horizontal analysis method, 2018 to 2019, there was that 0.3% increase in sales, 1.8% increase in total expenses, and a 1.2% decrease in net earnings. So using the vertical analysis method overall, the sales for 2019 were 79%. And this is 1% increase from 2018 and a 2% increase from 2017. And again, I have a chart there that that shows you the total sales, the total expense, and the total net earnings for all 3 years. So some capital decisions. So payback analysis, this takes the cost of the investment divided by the annual cash flow. This results, they'll equal the amount of time that it would take to pay back or break even on the investment. While this formula, it does seem easy and simple to figure, there are many non-financial factors that also are considered when making calculations, such as true costs and utilization, payments, margins, and clinical considerations. So with a cash flow of $350,000, it would take 5 years to pay back the $1.5 million initial cost of the EHR system, as the chart shows here that you see. And that's with 5.37% per year cash flow return rate. So the net present value, it's greater than the initial investment. So again, it's agreeing with a lot of these other things, and that break-even analysis. Again, those we want to think about labor and consumables and service, length of stay. They're all need to determine that break-even on the investment, including the price of the capital. So I'm going to go over my recommendation and summary here of the Acme Medical Center EHR. So the Acme Medical Center, the current ratio is 1.26, which is below that average of 1.44, but it is within that minimal 1.2 and maximum of 1.7 of good rating. There was a 42.8% increase in the net earnings from 2019 to 2020. The balance sheet shows that there are cash and cash equivalents have decreased in 2019 from 2018, but the overall equity has increased in 2019. So for 2020, the first quarter, the financial recordings do show the increase in sales and net earnings from 2019, but it is the best to compare the whole fiscal year versus a monthly or quarterly findings to reduce those seasonal variables. Overall, Acme Medical Center is in good financial health. The payback method and the net present value method were used to determine if the capital investment would be profitable. So based on these numbers, along with the ratio, the horizontal and the vertical analysis, I believe that Acme Medical Center's $1.5 million EHR implementation project would be beneficial. This project would meet the organization's ethical obligations to the community and the financial needs of the organization, resulting in a profitable project. Thank you.